Welcome to another audit walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over Audit Area 3. This is Section D2. This is an application topic. Determine the suitability of substantive analytical procedures to provide evidence to support an identified assertion. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. Again, it's free. It's 1 hour long, and we will teach you the key ingredients to passing the CPA exam in just that 1 hour. So make sure you check that out. Also, after you watch that, you're going to want to learn more. So make sure you also check out becoming a SuperfastCPA Pro member. In today's video, we're only going to be going over 5 questions, but SuperfastCPA Pro members get access to the full 10-question version of the video when we post it in the member forum. So if you like this and you like our other products, make sure you check out becoming a Pro member because you'll get access to the full versions of these videos. Now with that, let's dive into the questions. All right, here we are at question 1, and something I always like to point out in these videos is to read the last question or the last sentence of the question first, because that's going to give you context for what the question is about very frequently. You know, of course, there's going to be questions where they're only a sentence long or maybe only 2 sentences long, and it's maybe not as helpful in those situations, but frequently you'll also see a paragraph or 2 paragraph long questions, and you're reading through all of that, and then you only get to the very end and realize, oh, that's what I'm supposed to be doing. Instead, you read the last part of the question first, because that will let you know what to be looking for throughout the rest of the question, again, kind of giving yourself that context for what the question is asking. So let's do that here. It's a good practice to be in. For which of the following accounts are substantive analytical procedures most likely to be suitable? Let's go up to the top. An auditor is planning the audit of a manufacturer and is considering whether to use substantive analytical procedures instead of tests of details for certain assertions. So again, which of the following accounts are substantive analytical procedures most likely to be suitable for? Let's read through the options. Option A, legal expenses. Option B, miscellaneous income. Option C, depreciation expense, or option D, research and development costs. Now, if you have no idea what substantive analytical procedures are, or which one would be the most suitable in this case, that's okay. We are using these questions to learn about the topic. So let's go ahead and dive into the explanation to learn about this. All right, here we are. The answer is C, depreciation expense. So that's the most suitable in this situation. Let's go through it. Substantive analytical procedures are most effective when applied to accounts with predictable, stable relationships that are based on routine transactions or consistent methods. Depreciation is typically calculated using systematic formulas, so straight line or declining balance, based on fixed asset schedules. So the auditor can develop a reliable expectation for the account. They're going to expect to see the same or similar depreciation each time. In contrast, legal expenses, miscellaneous income, and R&D costs are often irregular or subject to significant management judgment, making analytical procedures less effective for detecting misstatements. And we've talked a little bit about analytical procedures in previous videos, but basically the idea here is the best time out of these options to use substantive analytical procedures is for things that are routine, that can be easily calculated. They are, based on something that doesn't really change that much or whatever the case is. Again, depreciation expense would be a great use of a substantive analytical procedure. Now, we learned a little bit about that there. Let's go to the next question. All right, here we are at question 2. Which of the following would most likely increase the auditor's ability to rely on substantive analytical procedures to test an assertion? So let's go through the options. Option A, the account has been stable over several periods with predictable patterns. Option B, the auditor has limited access to industry benchmarks. Option C, the client's data comes from a manually maintained system. Or D, the account is heavily influenced by management's subjective estimates. So estimates. Now, based on the first question, I bet you already know the correct answer. If not, that's okay. Kind of read through this and think about what we just learned. And then when you're ready, come back, we'll look at the answer together and kind of expand on substantive analytical procedures. All right, here we are. The answer is A, the account has been stable over several periods with predictable patterns. And again, we pretty much just talked about that in the first question, so I kind of want to talk about that a little bit more now. Substantive analytical procedures are more effective when applied to accounts that are consistent and follow logical, predictable trends. Stability across periods makes it easier for the auditor to develop expectations and identify unusual fluctuations that may indicate misstatements. Unreliable data like manual systems, lack of benchmarks, or subjective inputs reduce the reliability of analytical procedures and may require tests of details instead. And again, we've kind of talked about tests of details in previous videos as well. Now we kind of expanded on question 1 there. Now let's go to the next question. All right, here we are at question 3. For which of the following assertions related to revenue would substantive analytical procedures be least appropriate as the primary source of audit evidence? So option A, completeness, option B, occurrence, option C, accuracy, or option D, cutoff. Now, we've learned quite a bit about assertions in the previous few videos when we're talking about evidence and things like that. So based on what we've learned or what you know based off of your general knowledge, which assertion is the least likely or the least appropriate to be connected to substantive analytical procedures for a primary source of audit evidence? Pause the video, think about this, and come back when you're ready. All right, here we are at the answer D, cutoff. Let's go through the explanation. Substantive analytical procedures are generally not effective for testing cutoff because this assertion relates to whether transactions were recorded in the correct accounting period. Analytical procedures rely on trends and relationships, but cutoff errors often require examining specific documents, such as shipping records or invoices around year end. Assertions like completeness, occurrence, and accuracy can sometimes be supported by analytical procedures when the data is reliable and relationships are predictable, but cutoff requires more precise, time-sensitive audit evidence. So that was a question that kind of helped us know that when you're talking about a completeness, occurrence, accuracy as assertions that you want to test or want to make sure of in an audit, you could use substantive analytical procedures, but you're probably not going to use them for cutoff. Now with that, let's go to the next question. All right, here we are at question 4. Which of the following conditions would most likely cause the auditor to decide against using substantive analytical procedures, or SAPs, as the primary audit evidence? An auditor plans to use substantive analytical procedures to test the existence of revenue. So again, which of the following conditions would most likely cause them to not use substantive analytical procedures? Let's go through the options. Option A, the client operates in a highly seasonal industry. Option B, the client has strong internal controls over revenue. Option C, the revenue account is large and has shown stable growth. Or option D, prior year audit results showed minimal misstatement in revenue. All right, think about this, pause the video, and come back when you're ready. All right, here we are at the answer. A, the client operates in a highly seasonal industry. That would be a reason for you to probably not use substantive analytical procedures. Substantive analytical procedures rely on predictable relationships, we've talked about that a whole bunch, and trends to identify misstatements. In a highly seasonal industry, revenue patterns can fluctuate significantly between periods, making it harder to develop reliable expectations. This reduces the effectiveness of analytical procedures. Even with good controls or a clean prior audit, unpredictable timing of revenue recognition requires more detailed testing, such as tests of details, to obtain sufficient appropriate audit evidence. All right, we'll learn a little bit more about when you would and wouldn't want to use substantive analytical procedures. Now let's go to the next question. All right, here we are at question 5. Which of the following best describes the auditor's next step before concluding based on substantive analytical procedures? Let's go up to the top. An auditor has developed a strong expectation for the client's utility expense using detailed consumption data and rate schedules. This procedure is being performed as part of the auditor's substantive testing. Which of the following best describes the auditor's next step before concluding based on substantive analytical procedures? Let's go through the options. Option A, confirm utility balances with the vendor. Option B, test internal controls over utility payments. Option C, compare recorded amounts to the developed expectation and investigate significant differences. Or option D, perform a walkthrough of the utility billing process. Okay, pause the video, think about this. We've learned a little bit about this throughout the other questions, so if you want, you can kind of think through this, and when you're ready, come back, we'll look at the answer together. All right, here we are. The answer is C, compare recorded amounts to the developed expectation and investigate significant differences. Okay, let's go through the explanation. Analytical procedures are required during planning and at the final review stage of an audit, but they can also be used as substantive procedures when appropriate. In this case, the auditor is using an analytical procedure to obtain substantive evidence. After developing a reliable expectation, the auditor must compare it to the recorded amount and investigate any significant differences. This step is necessary before concluding whether the account balance is reasonable. Other options listed relate to different types of audit procedures and are not part of the analytical procedure itself. So we kind of learned a little bit more about analytical procedures in general and when you can use them as substantive procedures. Just a reminder, and we might talk about this in other videos as well, but analytical procedures are required, I just want to say this again, during planning and at the final review stage of an audit. They're not required at any other parts, but they can be used as substantive procedures. And we've talked about that throughout this whole video. Now, we went over quite a bit about substantive analytical procedures in these 5 questions. Before we do anything else, let's do one more part of the SuperfastCPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up in the questions. You've seen 2 or 3 or 4 questions trying to teach you about when it is appropriate to use substantive analytical procedures for this kind of assertion or whatever the case is. You notice these things in the questions and you write them out in your own words as the pillar topics, the most important things you learned from the questions that day. And as you're doing this each day, you're building your own personal repository of the most important things you learned from the questions in your own words so that you can be ready for the exam. Now let's go ahead and take a look at the pillar topics for this video. All right, here we are at the pillar topics. Let's just dive straight in. First off, suitable accounts. What's suitable for substantive analytical procedures? Substantive analytical procedures work best for accounts with predictable, routine patterns like depreciation or payroll. These accounts allow the auditor to develop reliable expectations based on consistent inputs. Now let's talk about data reliability. You have to have reliable data for these kind of procedures. The effectiveness of analytical procedures depends on the reliability of the underlying data. Stable trends and high-quality information improve the auditor's ability to detect misstatements. Now let's talk about the assertion fit, which assertions fit analytical procedures or substantive analytical procedures and which don't. Not all assertions are well suited for analytical procedures. Assertions like cutoff or valuation typically require detailed testing rather than high-level comparisons. Now let's talk about the limiting factors. Accounts influenced by judgment, seasonality, or unusual transactions are poor candidates for analytical procedures. These conditions make it harder to form meaningful expectations. And then finally, the required steps, the steps to using substantive analytical procedures. When performing substantive analytical procedures, the auditor must compare expectations for recorded amounts and investigate significant differences. Without this follow-up, the procedure is incomplete and unreliable. Now, we learned, again, a lot about the use of substantive analytical procedures and when they are correctly used and when you shouldn't use them and things like that. And with that, that is actually the end of the YouTube version of this video. Remember, we're only going over 5 questions today, but SuperfastCPA Pro members are going to get access to the full 10-question version of this video when we post it in the member forum. So if you like this and you like our other videos, make sure you check out becoming a SuperfastCPA Pro member to get access to a lot of great stuff. The Pro course, where we go very in-depth on exactly how you should be studying every day. And also, again, these 10-question walkthrough videos. Now, the easiest way to become a SuperfastCPA Pro member is actually going to SuperfastCPA.com and signing up for our free 1-hour webinar training. If you watch that webinar training, that will give you a great path to learning about and becoming a SuperfastCPA Pro member. So do that first, then become a Pro member, and you'll get access to a lot of great stuff. I hope this video was helpful. If you did like it, make sure to like it and leave a comment. I will see you in the next video.